Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the open. Coming up, investors eyeing volatility as we hear some negative news out of China, Evergrande as well, creating shockwaves across the Chinese property market, and energy prices start ticking higher. Speaking of which, oil, the tight supply picture is back in focus. More on that and where technicals are headed in just a moment. And cloud clout. Amazon invests up to $4 billion in Anthropic in a bid to step up the AI race. Now, not long before Wall Street starts trading, this is how equity markets are looking on the IG platform. We are seeing a sense that the open on Wall Street is going to be quite muted. Of course, this is coming off the back of quite a momentous week. Investors still digesting all of the comments and the moves by central banks, not just in the US, but also in Japan and also in the United Kingdom. We've got the volatility indexes. You can see there creeping slightly higher. Volatility has been very low, historically low at levels not seen since, if I widen this out into a monthly picture, that gives you a better idea. Levels not seen since November 2019. But if you look at the hourly figure, we are seeing the VIX tick higher. And it's not hard to see why. Plenty for investors to kind of make a sense of at the moment. We had, of course, the economic data last week, which largely was mixed. And of course, the Fed remarks as well, the Fed leaving the door open to another hike potentially this year. The S&P 500, the NASDAQ, let's just have a look at the NASDAQ for you. Here we are. That's the US Tech 100 registering the biggest weekly percentage drop since March. This was in Friday's session. There you go. There's a weekly view for you. This coming as benchmark treasury yields hit multi-year highs, while IG's Axel Rudolph has been taking a closer look at where these indices are headed, but from a technical viewpoint.
On the back of rates higher for longer scenario in the US, US equity markets have come off very sharply last week, with the NASDAQ and S&P 500 dropping by around 3% each. And we can also see that from a technical perspective, we've now fallen through some key support going back to June and August of this year. And that means that the odds are stacked for further downside to probably be seen over the coming weeks. And we could be heading all the way back down again towards the highs seen back in the beginning and middle of May of this year, between 4,214 and 4,187. And it's also where the 200-day simple moving average comes in. So this is a potential downside target area for the S&P 500. And as you can see here, we are currently on track for our 7th consecutive day of falling prices with regards to this index.
Thanks very much, Axel. Well, there's also, as I mentioned earlier, a lot of news coming out of China. The country's banned Nomura's senior investment banker from leaving the mainland. According to sources, Evergrande's debt setback and negative news linked to developer Oceanwide Holdings also creating waves of worry across global markets. And there's the rising energy prices, just when central banks think they've got inflation under control. How is this all going to play out in terms of volatility? Well, Liz Deerking joins me from Chicago. She's the co-host of the Liz and Jenny Show, of Tasty Live, part of IG Group. Thanks so much for joining us, Liz. Where do you think the volatility is going to come from this week?
Thank you very much for having me. I would just like to state for the record, that is just thunderstorms you're hearing above me, which is now making my dog go crazy. So the volatility this week, it's pretty interesting because you hit the nail on the head. It ticked up a little bit last week, but not since levels since we've seen since 2019. But the volatility, I think, because of everything that's kind of going on as a whole with the Fed and with everything that's going on in China, I think we're going to see a little bit more volatility this week, which hopefully should bring some two-way action. But as far as the whole Chinese market goes, I have a little bit of talking my book, but I like seeing the volatility in the Chinese stocks because that risk reward scenario, they've been so beaten down for a while that it's interesting to see with the volatility there to maybe dip a toe in the water and see. The risk reward scenario seems to be to the upside there.
Liz, it's also a really big week for retail. We've got Costco, Nike, H&M. What's on your radar?
So looking at those, it's interesting because this is kind of a double whammy because you have retail sales with these retail stocks. I mean, I kind of like to see them together to see what's going to happen with them, see if they can kind of overcome this whole inflation, especially from those three particular stocks. There the lightning goes again. But I'm definitely looking at Nike after all the problems that they have been having, and for sure Costco. So those are the two big ones I'm going to be looking at this week.
Thanks very much, Liz. We'll check in on those retail stocks with you throughout the week. For now, let's move on to other corporate news and M&A. It's all about the cloud and Amazon this session. We've got news of this deal, and it's quite big, especially if you're in the AI space. Amazon saying that it will invest up to $4 billion in cash in the high-profile startup Anthropic. For those of you who are not familiar with this company, it helps do all sorts of things from create pros to harness systems that they say help make AI safer. Amazon is wanting to use Anthropic to build an AI foothold. And in return, Anthropic will also rely on Amazon's cloud services. Now, much of this is, many analysts say, going to be symbiotic for the two companies. It also gives Amazon a leg up, if you may, against other cloud rivals that have marketed or developed powerful AI tools just this year. They include Microsoft and Alphabet's Google as well. And as you recall, since 2019, Microsoft, along with many other rivals, have put billions of dollars into things like ChatGPT's creator OpenAI to try and get ahead of the AI services sector. Another developing story that we are following for you throughout the last few weeks and also this session is the strikes affecting car makers in the United States. Currently, no deal just yet. In fact, Ford coming out saying that there are significant gaps, quote, significant gaps remaining in the talks with the UAW. Ford also saying that the issues are interconnected and they must work within an overall agreement that supports their mutual success. That was Ford on the UAW's strikes. However, as I mentioned earlier, there is no real progress yet in talks. And the moment we hear of any developments, we will bring that to you. Meanwhile, just checking in on several stocks for you, including Warner Brothers, because we're getting quite some interesting moves here. Warner Brothers, not one of the ones that is all sessions. I'm just going to give you a daily view so I can widen it out for you. But Warner Brothers, Paramount, and Netflix and Walt Disney all gained after Hollywood's Writers Union reached a preliminary labor agreement with major studios on Sunday. Just showing you Disney and Netflix. They are all sessions stocks. And if I change this to an hourly view, there you have it. That's a better picture of where Netflix is at the moment. And it is currently up 0.2% on that after that news. Disney is also another all session stock for us. And Disney is also up ever so slightly, 0.1%. HP is another one that we are watching closely, even though I believe it's not an all sessions. Oh, actually, it is an all sessions stock. There you are. HP, this is the hourly view for you, down 0.2% after Warren Buffett's Berkshire Hathaway sold almost 4.8 million shares of the PC maker. And last but not least, I mean, we're waiting on Nike's results anyway. Nike's another one that we are watching because it's an all sessions stock, so you can trade that all sessions on the IG platform. That's the hourly view for you for Nike. And currently on an hourly view, it's pretty much flat. Nike and Foot Locker the view here after Jefferies downgraded both the stocks to hold from buy. Meanwhile, the big story that is likely to captivate investors this week is, of course, oil. Oil started the week on the front foot as the market continued to digest Russia's temporary ban on diesel and gasoline exports. This is according to Tony Sycamore from IG, markets analyst here. Many of the analysts and economists and CEOs that I've been speaking to have said that oil remains the last remaining piece of the puzzle as to where inflation is going to head in the second half. Many hedge funds have been piling recently into the oil rally on bets that the West Texas Intermediate crude will rise even higher after reaching levels not seen since February 2022. Oil prices have risen 30%, just showing you the chart here, since end of June. And much of this is due to the supply side as well. Just showing you WTI here, US crude rather, as it's called on the IG platform. If you look at this chart here, you can just see the climb on a daily chart since around June 2023. So almost 30% increase there, thanks to supply curbs from OPEC Plus, linchpin Saudi Arabia and Russia. Also, the brighter outlooks from the two biggest economies, the US and China, also helping to underpin prices. Now, before we go, let's have a quick look at the markets for you. As I mentioned earlier, so much going on at the moment, not just oil, but also the news out of China and, of course, the potential stoppages and shutdowns. Can't believe we're there already. We talk about this once a year at least, and we're back at where we began earlier this year. So let's have a look at Wall Street. As I mentioned earlier, muted open is expected. There you have it. That's the level for you. Let's show you an hourly chart. And we're expecting this caution to potentially continue during the week before we get a further sort of impetus for oil prices and, of course, earnings. Now, that's it for this edition of Beat the Street. Do follow us on @IG and @Angeline Ong for more analysis and, of course, following the trading action to help you position yourself ahead of the opening bell. Do tune in every day at 13:30 London time. I'm Angeline Ong, and this is IGTV.